Welcome back to Investing Talk Podcast.
Today, we are taking a serious look at Nokia.
Yeah. Okay, hold on. I have to stop you right there.
Yeah.
Are we talking about the company that made those, indestructible brick phones from the early 2000s?
We are the very same one.
Because, unless we're planning to play a competitive game of Snake, I'm not entirely sure why we are dedicating a full deep dive to them right now.
Yeah.
Feels like we're looking backward, not forward.
And see, that reaction, that is exactly why this is so fascinating. It's a perception gap.
A perception gap.
Yeah. And honestly, most of the market, you hear Nokia and you immediately think of what? Flip phones and ringtones. It feels, well, irrelevant. But the data is showing a company that's quietly transforming into a critical backbone for AI infrastructure.
Critical backbone is a huge claim for a brand most people think disappeared like 15 years ago.
It's a big claim, I know.
Yeah.
But we're seeing a shift that the market hasn't fully digested yet. This isn't a phone manufacturer anymore. This is a networking giant partnering with NVIDIA.
Okay, you say the magic word, NVIDIA.
Yeah.
That definitely changes the context. All right, before we get into whether Nokia is an AI sleeper pick or just a value trap, let me just do the housekeeping.
Go for it.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really, really helps us out.
So here's the hook. We saw massive growth in their network infrastructure segment in Q4 2025. We are talking about the actual plumbing that makes AI work. And I think the market is completely mispricing that NVIDIA factor.
I'm going to hold you to that because when I look at the stock chart, I see weakness, even after beating earnings. It feels shaky. My job today is to figure out if this is a genuine turnaround or if I'm just going to catch a falling knife.
Fair enough. Let's dig in.
All right, let's unpack the fundamentals first. I'm looking at the Q4 2025 numbers, and to be honest, on the surface, it looks pretty.
Underwhelming.
Yeah, they reported comparable net sales of, 6.1 to 6.13 billion. That's a 3% year-over-year growth. 3% in this market. That doesn't exactly scream rocket ship.
If you start at that headline number, you miss the entire story. You have to peel back the layers. The total top line is being dragged down by the old legacy parts of the business. The real story, the one we care about, is inside the segment breakdown. Look at network infrastructure.
Okay, I got the segment data here. Scrolling down. Okay, I see it.
What's the number?
It grew 19%.
19%. That segment alone brought in $2.4 billion. That is not 3% growth. That's massive acceleration. It's a growth stock hidden inside a value stock.
Okay.
And zoom in even further. Look at optical networks within that.
Up 17%. Okay, let's pause there. For anyone listening who isn't a network engineer, why does optical networks matter so much?
Great question. Think about an AI data center. You have thousands of GPUs crunching data. They all need to talk to each other instantly. If that connection is slow, the chips just sit there idle. That's wasted money.
So the bottleneck isn't the chip anymore. It's the cable connecting them.
Exactly. Optical networking is basically using light to transmit data at insane speeds. It's the superhighway for AI, and that 17% jump tells us that direct demand from AI and cloud is hitting Nokia's books right now.
So you're saying the 3% total gross is basically masking a 19% explosion in the stuff that actually matters for the future.
Precisely. It's a mixed shift, and it's not just revenue. Look at profitability. Gross margin expanded by 90 basis points to 48.1%.
That is a decent jump. 48% is healthy for hardware. But I do see a note here that Nokia Technologies, their patent licensing arm, contributed less. And that's usually the high-margin free money.
Right, which means
the core product margin is getting even better.
You nailed it. It's coming from the product mix. They're selling higher value infrastructure. It's a sign of pricing power. And their guidance for 2026 is targeting a comparable operating profit of 2.0 to 2.5 billion.
I do like the discipline I'm seeing on the cost side, too. They locked in $400 million in recurring savings.
Yeah.
I'm always a fan of a company that trims the fat while it's trying to grow.
It lets them control their own destiny, and that discipline feeds right into their financial health.
Which I have to admit looks rock solid. The balance sheet.
Yeah.
They have a current ratio of 1.48. They aren't going broke anytime soon.
And look at the debt. The debt-to-equity ratio is just 0.21. That is incredibly low.
Which is really rare for this kind of company.
Yeah.
Usually these guys are swimming in debt.
Exactly. And that liquidity is the key. They can afford to aggressively reinvest in AI and 6G, and they're still proposing a dividend.
So they're paying you to wait.
They're paying you to wait. And this isn't some cash-burning startup. It's a cash-generating machine pivoting into a high-growth area.
Okay, but let's talk about the moat. Why can't a cheaper competitor just come in and eat their lunch?
Well, this brings us back to NVIDIA. Nokia has an AI RAN partnership with them. They're positioning themselves for what they call AI native 6G leadership.
That sounds like a lot of buzzwords in a blender.
Yeah.
What does AI native actually mean?
It sounds like buzzwords, I get it. But it's a technical reality. It means integrating AI directly into the network architecture, so the network can basically optimize itself in real time. It's a smart highway instead of a dumb road.
Oh.
And this partnership deepens their moat. It makes their infrastructure smarter and, harder to rip out and replace. When you compare them to a competitor like Ciena, Nokia has the full end-to-end portfolio. They're selling intelligent networks, not just cables.
All right, I'm willing to concede the fundamentals are more interesting than I thought. The hidden growth story has some legs, but the market doesn't seem to care. Let's pivot to the charts to see if the price matches the story.
And this is where it gets a little frustrating for the bulls, but interesting for anyone looking for an entry point.
Frustrating is the right word. Despite that Q4 beat we just talked about, the share price has been weak. It's down, between 5 and 10% recently? If the story's so good, why is the stock dumping?
It's a classic disconnect. The weakness is likely a reaction to the soft guidance for Q1 2026. But technically, what we might be seeing here is a psychological base forming.
A base, or a knife that's still falling.
I'd argue it's a base. Just look at the RSI, the Relative Strength Index. It's hovering around 59.
So pretty neutral. Not oversold, but definitely not overbought.
Exactly. It's neutral to slightly bullish. It means the stock isn't overheated. There's plenty of room to run if the narrative shifts. It suggests stabilization is happening.
And the volume.
It was elevated around earnings, which is typical. I see this current pullback as a positioning opportunity. The flows could reverse if they hit that growth target in network infrastructure. If they deliver, the technicals will follow.
You think the chart is basically coiling up for a move?
I do. It feels like a spring being pushed down before a potential breakout.
So the charts are mixed.
Yeah.
But what is the smart money thinking? Let's move to sentiment, because often the algos pick up on things before we do.
This is where we see a really sharp divide between the price action and the underlying data.
Yeah, I'm looking at the quantitative scoring from AlphaVantage. The weighted sentiment is actually bullish.
Right. The algorithms are picking up on something the day traders might be missing.
Seeking Alpha shows a high relevant score, and the sentiment is 0.464 bullish, specifically tied to that NVIDIA AI RAN angle.
That's the key. The sentiment algos are reading the news about NVIDIA and flagging it as a major positive, even if the stock price hasn't moved yet.
And Zach's also showing a bullish score, comparing Nokia favorably against Ciena.
It's because of the market mood. The general consensus is still stuck on Nokia's boring telecom history. But the smart money indicators are looking at the AI, defense, and 6G growth story.
Defense is an interesting angle.
It's huge. Secure networks. In a fractured geopolitical world, governments need trusted infrastructure. Nokia is a trusted European vendor. That's a serious tailwind.
Absolutely. And when you look at analyst ratings, you're seeing strong buy ratings. They're clearly looking past the next 3 months to the next 3 years.
And there's also the rumor mill to consider. The potential for that NVIDIA partnership to expand, and the integration of the Infinera acquisition. If AI demand sustains, that 17% growth in optical could accelerate even further.
Okay, that sounds great. But I have to be the bad guy. It's time for the bear case. Let's pour some cold water on this.
Let's hear it. What worries you?
The immediate hurdle. Risk number 1. The Q1 2026 dip. Management has explicitly warned that Q1 revenue is going to decline. Why would I buy now if I know the next earnings call is going to be a downer?
It's a valid risk, but remember that 10% drop in the share price we just talked about?
Yeah.
That's the market pricing in that dip. The bad news is already out there. Unless Q1 is a complete disaster, the shock value is gone. If you wait, you might miss the move up.
Fair enough. Risk number 2. Operating margins. They're spending money to grow, digesting the Infinera deal. If they spend all this money chasing AI and the growth doesn't show up fast enough, those margins could get crushed.
That's always the risk with a pivot. But you have to look at the counterbalance. They have that $400 million savings plan as a buffer. And that free cash flow target. They have a framework. It's calculated risk, not reckless gambling.
Okay, what about competition? Risk 3. Ciena. They're a formidable competitor in optical. They aren't just going to roll over and let Nokia take share.
Ciena is a great company, no doubt. But look at the growth again. Nokia grew that sector by 19%. That suggests they're either taking share or they're uniquely positioned in the part of the market that's growing the fastest, the AI-driven side.
The niche within the niche.
Exactly. And that end-to-end portfolio with the NVIDIA partnership gives them a defensive trench that a pure-play optical vendor just doesn't have in the same way.
So you think that AI moat is real enough to fend them off?
I do, because it's not just about the pipe anymore. It's about the intelligence of the whole network.
Right. We've looked at the fundamentals, the charts, and the risks. It's time for the verdict.
We have crunched the numbers.
I came in skeptical. Brick phones, 3% growth. It just looks sleepy on paper. But I have to admit, that 19% growth engine inside is compelling. It's like finding a Ferrari engine inside a Volvo. So, what are we scoring this?
I think we're aligned. We're assigning a bullish score of 8/10.
8 out of 10. That's pretty high for a company that's literally warning about a soft quarter.
It is. But this is a multi-year hold targeting 2028. The thesis is simple. Nokia is no longer a legacy telecom play. It's an under-the-radar AI infrastructure play. The 19% surge validates that. The balance sheet is healthy enough to support it.
I'll concede this. Even for a skeptic, the valuation gap is hard to ignore. The dip offers a compelling entry point for a company guiding for over $2 billion in profit.
Yeah.
You're getting a tech infrastructure play at a value stock price.
Exactly. You are buying AI exposure without the AI bubble valuation. You're buying value that is on the cusp of re-rating as growth.
And if that psychological base on the chart holds, the downside seems limited compared to the potential upside.
That's the bet.
All right. Don't forget to check the bullish score in your own research and see if you agree with our 8 out of 10.
And keep an eye on that network infrastructure number next quarter. That is the pulse of this entire thesis.
Don't forget to subscribe, like, and comment. We'll see you in the next one.